Hello traders, what's going on? So for today's session, right, I'll be going through a short market update, and then I'll also be going through one potential trade setup that we can take a look for now. We don't want to pull the trigger yet, but we can put it in our watch list for maybe for future trades. Firstly, I'd like to also apologize for the lack of video recently, mainly because my March 2022 course is coming up and I'm preparing all the materials for my up and coming students lah. So because of that, I'm slightly packed also. But more importantly, another reason is that currently the market is still extremely volatile. So at this time, we do not want to anyhow enter the market yet. We don't want to get FOMO, mainly because if you were paying attention to the US market, there were days where the S&P futures is down about 70 to 80 points pre-market. And then during the market itself, it recovers 7 to 80 points. And then in the middle of the market hour, it went down another 70 to 80 points. So we are looking at like 200 points swing in the S&P within a single day. And that is not the kind of market movement where you want to be making trades lah. So even if you are in the market right now, I do hope that you still have a lot of cash on hand, meaning your position are probably only like 20-30% and the other 70% is in cash lah, because at this point we do not want to assume a direction and then throw all our cash inside only to get whipped out by the market. Okay, so that is extremely important. And next, right, looking at the S&P 500 itself, so this is the market update lah, is that what you will notice is we have created a bottom back in the initial carnage of the market. So let me draw the lines. So this is the so-called initial bottom lah. Then after that, market recover back to the top somewhere around early February like that. So up until now, right, we are still between these two range, and as long as price is between these two range, right, the direction is undecided. And not only that, you can see that the market is very volatile. It will swing up 1-2% one day only to swing back down another 1-2% the next day. And it is a very good sign that even the market participant, right, they are not really sure what's going on. Also, at one point, we have the inflation data, then suddenly market went down, and then the next day we have the Russian-Ukraine thing, and then the market went down some more, and then Russia pulled their troop back, and then market suddenly recover. So is it like inflation? Is it like the rate hike? Is it like the war issue? Or is it the earning release? So we have so many factors that it is almost impossible to pick a direction. And as a trader or even as an investor, if you try to prematurely pick your midterm, long-term direction at this moment and throw all your cash inside, right? You are in I would say a very weak spot lah. And although I do not wish to admit, this is one of those rare times where cash is truly king. We want to be holding some cash so that when the direction is clear, we can take the trade. So another thing that you might notice during this volatile market movement is also it is a broad market movement. Everything is going up, everything is going down. So there's no discrimination whether the company is good or bad or doing well or whatever. Like, it is a pure emotional movement where everyone is jumping in, everyone is unloading. So if you see a sell down, be it good company, bad companies, whatever company, everything is selling down. Same thing when there is a rally, everything is going up also. So there is no divergence yet. And because of that, right, it is very dangerous to go in right now. So you can see that yesterday when the market go up, We have things like Google going up, Microsoft going up. Then at the same time, we also have all the nonsense, all the nonsense counter that are going up. Also, we have Lemonade going up 11%. We have Palantir going up, Snowflake going up, DoorDash going up, Peloton going up, SC also going up. And of course, we also have counter like Snap that is going up like 4%. But if you look at counters like Snap, right, you can see that after the earnings, they actually rally back 56%. It gap up 56%. Although it might sound like, wow, like suddenly 56%, but what you will notice is that from the top, right, from the top, Snapchat actually went down 70%. And even from that bottom, it rallies up 50%, right? That's not even like half of what it used to be at the top, meaning it from $24, it rallied back up to 40, but at one point, Snapchat was at like $80. So sometimes we have this law of percentage coming into play, whether is it the downwards direction or upwards direction. You have to be very, very careful about like jumping into all these trades due to FOMO lah. Okay, and another thing is that you will notice during this earnings season, it is that the share price are extremely sensitive to earnings. Earnings in the sense that, is your company making any money? Is your earning data meet the market estimate or not, meet the market consensus? So if you miss the market consensus, or if you miss your earnings, or if you are not making any profit at all, right, the market is very unforgiving, extremely unforgiving. You will see the stock price go down like 10%, 20%, that kind. And I believe we have seen that in quite a few examples during the earning release. For example, I think PayPal went down some more, and even some other companies, like for example, DoorDash haven't come out yet. Palantir also haven't come out, but maybe CrowdStrike also haven't come out. But you will see that there are a lot of there are a lot of companies who miss their earnings, and then the price dropped by a lot. And on the other hand, right, if you are already making a lot of profit, but for some reason your growth is no longer there, a good example will be Netflix and Facebook, then the market also punish you by gapping down the price by a lot. So the two good example will be Netflix and Facebook. So from my view, I think that the market really wants both the revenue growth and the earning also. They want both to be still very solid. If not, the share price is going to be like get punished lah. So we are seeing a little bit of divergence in how the market is treating all these stocks, because if the earning is missed, or if the growth is not really up to the market expectation, price is going to drop. But at the same time, when market rallies due to whatever reason, right, almost everything is rallying. So it is because of this divergence here, right? We cannot really make any form of decision yet, because everything is still very volatile. So one thing I want to show you is also Roblox. So you can see that Roblox yesterday, it went up 7.29%. Okay, it went up 7.29% during the market hour. But when the market closed, Roblox released their earnings, and they actually missed their earnings. They're still making losses. So what happened after market hour? After market hour, the share price actually dropped 15%. So we are looking at this kind of big drop and big gap up in the due to all these earning results. So for the case of Google and Apple and Microsoft, you can see that big gap up coming in after their earning release also. So price are extremely sensitive. And if you look at Roblox, right, back in last year, 2021, it is not that Roblox like miss their earning for the first time. They have been missing their earnings quite consistently for the entire of 2021 lah. And even if you look at the Roblox financial also, let me click. So it is not like they are doing very bad. I mean, they are sorry here. Yeah, they are still growing. They are still growing. If you look at the quarterly, they are still growing. And then after that, the net income or the net loss because they haven't been making any profit, they managed to reduce their net loss also. So during the 2021 period, right, the market is very forgiving. Okay, you miss your earning, whatever, never mind, it's okay. Your revenue is growing, like good for you. But but during like right now, oh, you miss your earning, we are gonna drop the whole thing by 15%. So you can see market is no longer as forgiving to missing of earnings lah. Okay. So and even though you can see all these Chapalang tech counters, they are rallying like 6%, 10%, 11%, right? On a grand scheme of things, that movement is very tiny. That movement is very tiny because of the fact that they have dropped so much. That 10% rally, that 4% rally is not really a lot. So what you do not want is, you do not want to get FOMO by all these big percentage movement and then suddenly jump in and buy it. So from Nimbus Capital point of view, we are not really 100% bearish, or we are not even 50% bearish. We believe that in the next 1 or 2 years, market can still go up. Market will still definitely be positive. It will be higher than what it was today. Let's say, for example, at the beginning of 2023 January, I think S&P will probably be able to go to like 5,000 or maybe around like 4,009. Like if you look at it, that's like somewhere near the top here lah. Break this previous high lah. But that doesn't mean that everything is going up. We want to pick and choose certain industries, certain counters. So currently right now, we do have some long position. It is not that we are 100% shorting. We do have some long position on Archer Daniel Midland. It is one of the company that we put our trade setup out somewhere around $72 because of the breakout and the good earnings. And it is one counter that doesn't really correlate with the S&P 500. So it has low beta. So whenever S&P like drop by 80-90 points, right, Archer Daniel Midland is not going to drop by a lot. And of course, on the other hand, we also have a long position on Mastercard also, somewhere around here like that. So it haven't moved up a lot, or our position is still somewhere like break even, neutral, but it is also one of the companies that it's a non-tech company. We don't want to be in a tech long position right now due to all the huge volatility that is caused by tech, but it is also playing into the fact that the easing of travel restriction and the easing of all the COVID-19 regulation, right? You can see that almost every Western country, they are starting all these they are removing their mask mandate lah, and a lot of airlines counters are going up also. A lot of travel airline counters are going up also. So it is a post-COVID team play where you will see a lot of transaction happening on Mastercard and Visa due to the increase in travels lah. And on the other hand, also both Master and Visa, they are into crypto also. So they do have the crypto play there where they are not really outclassed by I mean, they have the piece of pie in the crypto industry lah. So that's one play also. So it's a much more robust play compared to buying a airline counter or whatever lah. So these are the two counters that we currently have long position right now. But in the future, we will still definitely be looking for long position, and we will try to react based on what the market is telling us lah. And right now, the market is telling us to stay away for now. Okay, so S&P 500, let's recap a bit. As long as the price is like between these two range, right, we will still be seeing crazy movement, very, very crazy movement, like a huge swing, like 100 to 200 point swing within a day itself. And then as long as price is within this period, right, it will be a broad market movement. Everything will go up, everything will go down. Doesn't matter you are doing good or you are doing bad or whatever. It will be a very big market movement. So we do want to avoid going all in during this period. And if you want to talk about charts, the technical analysis perspective, right? There are many ways this can play out. So of course, technical analysis is a good thing, but we don't have to be very careful when we are trying to make long-term decision, because things can really go either way. So number one, right, how it can go is that it can kind of like contract here, so it will end up like a triangle or maybe a bearish pennant, whatever, or bearish flag. And this contraction, right, it can be because as times goes by, the market have come down a bit, like everyone is not making emotional decision ready. And then once the market come down a bit and the direction is clear, right, it can either go down some more, which create a bearish pennant flag, or it can kind of like go up, and this whole thing will become a higher low. So from that technical perspective, both sides are equally plausible. But of course, we will always want to be in the long-term trend, which is this long-term direction. But it also doesn't mean that you can just blindly buy into it, because let's say if the price action doesn't contract, it remains very volatile during this period, right? You can still get cut off, and most likely, if you are trading this, right, you might have a lot of sleepless night, and it's not something that we want to be into. Okay, so our stand is very simple. You don't have to be 100% bearish, 100% bullish. Currently, my approach is we are taking like a 50-50 long short position. So we are not playing the index, but rather we are playing specific counter in a specific sector. We want to target the strong sector, the strong counter in the strong sector to long, for example, like MasterCard. And we also want to target weak counters in the weak sector to short. So hopefully after all this volatility is over, right, the strong counters and the weak counters, they will diverge and they will head in their own direction. It will no longer be a broad market movement. But at the same time, we also want to have a bit of one or two position where the trade is not really affected by the S&P movement itself. Like for example, low beta counters, like Archer Daniels Midland, that kind of counter, where we want to use these trades to buffer our portfolio volatility. We don't want one day suddenly our portfolio go up like 10-20%, then next day the portfolio go down 10-20%. That's too volatile already. So we do want to have these one or two slow moving counters to sort of help us buffer our portfolio a bit also. We are not definitely going to fill our entire portfolio with these slow moving counter, but it is good to have one or two. Okay, so now that's my market update for now. So let's take a look at one trade setup that I have in mind, and that is a short trade setup. So that counter that I'm looking at is actually Western Union. So I think most of you should be very familiar with what Western Union does, and I don't think I have to go through their business structure lah. It's just sending money. Okay, so immediately right off the bat, right, let's take a look at the technical itself. Immediately, if you look at the technical, there are a few things that jumps out. Number one, it is quite flat. It is quite flat since 2007, but let's look at the more recent price action now. Okay, so it managed to hit like the all-time high. Sorry, it's not all-time high, because 2007, they managed to hit a higher price lah. Okay, but they did manage to hit the high shortly before the COVID-19. Then after COVID-19 struck, you don't really see a huge recovery compared to every other US counter lah. So if you look at counters like maybe in a similar industry like PayPal, PayPal went up like, I don't know, 300, 400%, or even other banking industry that sort of support this kind of fund transfer or whatever, right? They went up a lot more than Western Union now. And of course, if during this period, during the COVID-19 recovery period, if you are trading Western Union, right, you are definitely missing out a lot, because we have so much tech counters and tech companies that are rallying like 1000%, 800%. So Western Union was definitely not a good choice to enter during that period lah. And it is very disappointing, because even after it sort of like rallies, and this was the point where the Federal Reserve is flooding the US market with so much stimulus money. The amount of stimulus money that has been flooded is like way more than back in 2008. So even with so much external help from all this additional money, right? We see that Western Union only managed to go up like 50%. At the same time, if you look at companies like Nvidia, during the 2020, right, it went up like 664%. So you have a lot of this I would say opportunity cost if you enter Western Union during this period. But that's basically not my point. My point is that the business model of Western Union is so bad that even with so much stimulus money in a zero interest rate environment, they are unable to break the previous high. And in fact, they sort of like come down during the April of 2021. It doesn't even wait for the 2022 carnage in the market. It just came down. It just came down first. but of course, during the earlier of 2022, right, the movement is not very so the movement isn't a lot. I mean, it's not falling down anymore. It kind of like recovers a bit, but mainly because no one is in this particular trades lah. And also, one thing to notice about Western Union is that they give a very high dividend. They give a very high dividend, currently at 4.75%. And you can see that the latest news is they approve $1 billion in share buyback program. So it does have that defensive aspect to it, which I believe a lot of investors flock here, like flight to safety. After everything is like coming down, they just want to hold a company that is doing share buyback, or companies that is giving out good dividend. I think 4.75% for a US company dividend is it's a lot. It's a lot. So even even those famous companies that is like well known for their dividends, such as Coca-Cola, right? They don't give out so much lah. But this dividend payment, I will not consider this as a positive thing, mainly because their debt is very high. Western Union debt is so high that why are they doing share buyback, and why are they paying out dividend? And also considering that their business structure is a very outdated business structure, there's a lot of other superior alternative out there compared to Western Union. If you want to transfer money, right, they are directly competing with the bank also, because you can easily do remittance transfer from the bank and all this kind of stuff, right? So they are in a very tight spot where there's not much growth. There's not much growth in their business structure. So if you look at the revenue, right, you can see that it's kind of like flat, and it's kind of like going down since 2018 like that for the total revenue lah. And if you look at quarterly, So quarterly meaning we are, because if you look at annual, right, it's only until 2021 lah. So if you want to look at how is it during in oh sorry, the 2021 result is already okay, my bad. Yeah, so if you look at the revenue itself, right, it's not growing at all. So for 2021 it does grow by a little bit, like 6.11%, but that's not a lot also. That's not a lot to justify buy also, considering their business structure. But let's talk about the debt itself. Okay, so if you look at the balance sheet of Western Union, they actually have a total liability of 8 billions, 8.5 billions, like that. So, which is ridiculous, which is extremely ridiculous, considering that the revenue that they make is like about 1 billion. And if you look at the market cap, of Western Union is 8 billion. The market cap of Western Union is 8 billion, and I don't believe I have often seen a companies with the total liability higher than the company's market cap lah. So is a little bit scary, mainly because you want to grow. You are already in a competitive business and you want to grow your business, but instead of growing your business, you are giving out dividend, you are doing share buyback, and share buyback actually have a very sneaky side effect, because if you do share buyback, you are reducing the number of floating shares in the market. And if you do that, what happen is you are kind of like artificially increasing your earning per share lah. So for example, let's say if for this year your earning is 1 billion, but there are 1 billion shares in the market, so your earning per share is $1 per share lah. Your earning per your EPS is $1. But let's say you do share buyback, and then you still have $1 billion in earning, but now because of the share buyback, you only have maybe for easier calculations, say you only have 5 million share left. Okay, so you actually buy back 5 million share lah. So now what happened is your earning per share actually doubled. So now your earning per share is $2 per share. But the thing is, your actual earning didn't go up. Your actual earning is still 1 billion, and the only reason why it goes up is because the number of share has decreased due to the share buyback. And considering that Western Union only made about 1 billion in revenue, I'm not sure what is their net income or what is their cash. We can find out, but it's not within the scope of this video lah. And 1 billion share buyback is actually quite a lot, and I think they are trying to use artificial means to keep their shareholders by raising interest rate, by raising the dividend payout, which they don't really have the cash to do so. And on top of that, they are also doing share buyback with such a high amount compared to their earnings lah. And on top of that, they already have very high debt. So I'm not sure how are they going to manage all this stuff. But regardless, that currently the price action is still going up. So of course that's the main reason why we do not want to pull the trigger. And I believe the reason why it is going up is the flight for safety lah. The flight for safety. People just want like you know, traders who lost so much money and then suddenly become investor, right? We just go and like buy a counter with very high dividend, and we just want to like park our money there. Really don't want to touch the stock market. Really, you know, that kind of mentality lah. I think that is actually what is happening here. The flight for safety. Oh, so another things that I want to point out within the balance, this earning release itself, is the revenue. Sorry, let me go and find the revenue. So sorry, give me a while. Okay, here. Shit, this is 2020 last year one. Okay, here. Okay, so if you look at the revenue here, you will see that majority of the revenue is coming from consumer to consumer lah. So meaning fund transaction lah, fund transfer lah. But they do have another sector called the business solution, which kind of like it contribute very little to their revenue, only like 10%. And they have also these others which I have no idea what, but what you can see is that the consumer to consumer, right, it makes up the bulk of their revenue, 90% of their revenue, and it's actually contracting. They actually lost 1%, 1% that is attributed to their main business. On the other hand, the business solution went up by 22%, which is a good thing. They have a side business to kind of like make sure that they are a little bit more diverse. They are not totally reliant on their consumer to consumer. And it is kind of growing, but the thing is, yes, it grew 22%, but it's not a lot. It's not a lot. It simply went up like 20 million. It went up like 20 million, whereas a 1% decrease in this is like the whole thing went down by 10 million like that. The revenue growth, the revenue for C2C went down by 1 million. So in terms of this kind of comparison, right, I think their business solution have to grow by a huge amount in order to have substantial diversification to their business. Another thing is, if you look at their presentation also, right, if you look at their presentation, they do focus quite a lot on the fact that their business solution is growing by quite a lot. It is their so-called the highlight lah. And on a percentage basis, right, it does seems like a lot, 22%, but you don't really see the actual number here. They do say it contribute to 8% of the company's revenue, but if you don't dig a little bit deeper, right, it is quite hard lah. It is quite hard to sort of make decision in the sense that you need to come here to see it actually went up by 22%, but the number is still very, very small lah. It doesn't contribute to so much. So another question is what exactly is their business solution? So if you Google a bit, right, their business solution is mainly to help customer make international payment in a broad range of currency. Small business owner entrepreneurs can also accept foreign currency holding balances, which means you can accept payment in multiple currency and hold the money until you need it. So in a way, it is not a unique business. There are a lot of competition out there. For example, PayPal can do the same thing, I believe, and there are a lot of banking app that allows you to do the same thing also. So meaning it is so-called the side business that is sort of like growing, right? It also have a huge competition. So you have a main business that is already very outdated and already have a huge competition with the banks and PayPal and some other payment online payment system, right? Even their so-called business solution, which meant for their diversification, also have a huge moat. Is that it's a there's so much competitor out there. So I'm not really confident in terms of like the revenue growth or the earnings going forward with this particular counter lah. So with all that said, right, if we look at the technical, it's very clear that we have a high here and we have a lower high here that has been established, and also the trend has been broken. Okay, so we have one little bump here. We have one little bump here before things start to like go all the way down. We have one little bump here before things start to go all the way down. I'm not sure how you want to draw this trend line, totally up to you, but no matter how you draw this trend line, right, it is still broken lah. The trend line is still broken lah. Okay, so I don't care so much about how the trend line is being drawn, but we do have both fundamental weakness and technical weakness on this counter itself. It is just that currently the price is still going up. So I believe it was, I mean, let the positive price action like play out. You don't have to immediately jump in right now. But the moment we see like one big bearish red candle come in, right, we can actually go for the short ready. And I think that will be a very good good short play, because the fact that it is currently recovering right now, meaning that there's more room to fall. There's more room to fall. Okay, so that is the short play. So that is as much as I am willing to share for this particular trade idea and trade setup. So to summarize, Western Union, they have stagnant revenue. Their main business, the consumer to consumer, is contracting. Their side business, the business solution, even though it's growing, it has huge competition in the market where I believe they are late. They are late to the market. There's a lot of other companies that are doing what they do and they are doing it better. And thirdly, they have a lot of debt. They have so much debt. And on top of that, they are doing share buyback and they are giving out dividend, which on the surface, it is a positive thing if your business can support. But if your business cannot support, then those are actually negative, because at some point, if next year your business doesn't improve, right, then you are committed to the dividend payout and the share buyback. And if you somehow due to bad business, we reduce your dividend payout, right, then you will see all the investors start to sell the counter also lah. So that's I will consider that as a negative also. Okay. So based on all these factors, right, Western Union is definitely a short, but now is not the time to pull the trigger. We will monitor this, and the moment we see a good price action coming forward, we will do a short sell on this counter lah. So if you want to like keep yourself updated with this trade idea, if you want to know when Nimbus Capital is shorting and where is our stop loss or price target, or we might even use put option to short this counter, who knows, you can definitely follow us on Patreon, where we will provide a lot of frequent updates and our trade ideas and our trade position lah. Okay, so now it's a very I would say uncertain time. It's a time of uncertainties. We don't really know what's going on with the market. So once again, I would like to reiterate that don't jump into the market right now. It is easy to feel FOMO looking at 8% recovery, 9% recovery on certain companies. But once the direction is known, right, there's definitely opportunity for you to go in. If you are going in right now due to FOMO, most likely what you are going to do is you're probably gonna go in and go out and scalp that maybe 2-3%, and then you probably feel good about it. But if that company decide to continue to go out, right, you are probably not gonna be in the trade ready, because if you are in the trade during this volatile times, right, you will always be worried that next day, what if the price suddenly gap down? Because that's what's happening right now. You have price gapping up and gapping down daily with respond to every single sensitive news out there lah. Okay, so do stay safe, both in the market and both out there physically. We have like close to I don't know, was it 30,000 on COVID-19 cases? Yeah, so it's a very tough times out there lah. Okay guys, stay safe and have a good week. Thank you very much.